Hi, this is Shane with The Rational Trader. It's Saturday the 16th. We're going to review the week here and talk about next week. There's some fairly big things in the offing here. Let's take a look at oil, which is on screen here. I got very painfully nicked right there. So short there. And then stopped out. I needed, I'm using a 7-tick stop. I needed 9 ticks here. And I missed that move there. And then something very similar happened in gold, though not quite as bad. Got long here, right there, and take a stop, and then try again. So the system's doing this automatically. Very difficult for a human to do that. And this is exactly the right spot, right? That's the low. Unfortunately, I'm trailing a bit too tight, so I end up missing this beautiful move here. This is like 50 ticks, so I made 10 ticks instead of 60. So that's an artifact of the way that we're trailing there. What I show is that you can. My traditional way of trailing is you don't move that stop until you hit like 20 ticks. With the machine, we found that we're better off trailing more tightly. But this can happen, and that hurts. In oil, this is a function of sort of just the natural, almost like Brownian motion or natural variability of the market. It's just unfortunate when it happens. It's worse in a week like this where you're just kind of keeping your head above water. You're just treading water. My result for the day was $22, and for the week. $40. So it's a scratch week. And in fact, it's really 131 was the ending value for the week prior to that. So it's really just in a couple of weeks that has been scratched. Not too much the prior as well. And we were kind of talking about these kinds of droughts that you go through. There's a couple things to think about here. The first is that when things aren't going well, this is what you want to see. You're not losing lots. In fact, I'm not losing at all. Right? I'm scratching. I'm getting eaten a little bit by the commissions, but we're not taking huge numbers of trades here. And so that's sort of the first thing. The second thing is, okay, well, is that normal, or is there some more larger systemic problem? So, we were chatting about this, and actually had one of the members look at I ran the simulation data and gave him the file, and he came back with, there's these stretches where there's 3 or 4 weeks of time where you're just eking by. All right, and so it speaks to the defensive posture that I'm taking here, where I'm looking for. I want to stay in the game and then catch that trade. I happen to miss it here this time, and I catch this one here. London, the overnight London made 10 ticks last night in sim. Earlier in the week, it did really well, and so had that been live, I'd have been pretty happy with the week actually. Let's take a look at that real quick. My point is that the nature of probabilities, you don't get a necessarily linear output, and so you have to recognize that and make sure that you don't let it affect you and start doing foolish things. But having said that, I was speculating about, well, why do we see these droughts and things like that? And I'm going to come back to that in just a moment. Let's look at activity log for Sim 6EH9. Yeah. So you can see there's a nice day there on the 13th. So for the week, 406 in that market. So one of the things I'm doing next week is now that this has been burned in Sim, I'm going to move this to live next week. And then I think I need to run that live for 1 week before I release to members. So that'll be one more week yet before that comes out for members. let's take a look at the other markets here real quick, and then we're gonna come back to this drought issue. Okay, so let's see, the yen took a 1 trade loss here, and then so actually it must have been some slippage there because I'm using a 6-tick stop in this market. I don't like that trade personally. It's a breakout trade. You can see 141. I like that better when you're getting in before you actually break through here. Me personally, you're just getting away from the POC, so you're okay. Anyway, take a loss there, and then in 6E plus 9 ticks. So took a short there towards the end where we take a loss, and then what happened before then? Along here, this is a good example of what I want to talk about in a minute, actually. So along here, as you cross back through that value area low, and that gets 16 ticks, yeah. So let's keep this on screen. I'm going to come back to that in a minute. And then did we cover gold? We covered the one painful thing in gold. There was there were just these 2 trades, so a -7 and a +10. And then in oil, did we cover all of it in oil? Let's see. And this is also a good place to talk about what we're doing here about these droughts. Okay, so if we look at this market, right? This dashed line here, this line here, and this one here represent the value area highs and lows at the time that the bar was drawing. So at the time that this bar here was drawing, it looked like this and here, all right? In other words, the market had broken above the value area, pulled back to it, and then was continuing to break higher. All right, this is right when the market opens. Okay, so you spend a lot of time here outside the value area with the way that the volume profile trading works, there isn't a low volume node there for me to work with until this point. Right there, you see it come in, right? That's what this line is. It's a low volume node. So as we pull back to it, we start looking. Okay. Now let's switch over to, so in other words, I don't have a shot at any of this here. Okay. Now let's look at the 6E. So this is very similar here. It's not quite as bad, but because you've got low volume nodes forming and you're pulling back to them. But here I don't have a shot at it if I didn't get in up here. All the way down to here, you can see this low volume node here forms on this bar, so it's much too late. It has to pull back to that to get in there. Okay. Here you're pulling back to the low volume node that formed on that bar. In other words, you had enough trading happen below that level to establish that, okay, that's a low volume node. All right, this actually looks okay here now that I look at it because you've got nodes here that you're pulling back to. All right, but in oil we see this case quite a bit where it breaks above or below and then runs and doesn't give you an opportunity to get in using kind of the methods that we're using here related to volume profile. And so the question was, well, can I do something about that using the machine learning system? All right, and if you look at, let's see, where is it? So to members, this will look familiar. This is the action codes that are combinations of price action and order flow that the machine learning system finds, and these are the behaviors with order flow that we're looking for in the market, and then we're choosing which of these behaviors to trade based upon how often we see them repeated. And you'll notice, and actually, let's take a moment and revisit exactly how that's done. So it's useful to remember that we're not taking the past data and backfitting it. We're not taking a set of rules that apply to this data and then applying it to that data. Of course, if you do that, you're going to be able to find a set of rules or whatever that perfectly fits that data. Instead, what we're doing is, we take the machine learning system and the capabilities that exist with the artificial intelligence algorithms, and I build a model through a certain date. In this case, it's now up to August 17th. Okay, and then I use that model to predict what will happen next. So the machine's never seen any data beyond August 17th, and then I predict. I have a program that takes that machine learning model and says, okay, what would you predict on this trading day, on every trading day between 8:20 the next Monday and last Friday. Okay, and I do that for 6 months. All right, and then I analyze that output to see which behaviors am I seeing repeat in that market. So there's three factors that we're looking at. One is frequency. How often am I seeing that behavior? But I don't care about all behaviors. I only care about ones that have a high trade quality. So that's what this factor is. So show me. What I do is I break that set of time. It's 24 weeks up into buckets, and what's shown on screen is 4-week buckets, and then I'm looking for, show me all of the behaviors that had a certain level of trade quality, and that's defined by profitability, the most profitability on the least number of trades. All right, and I want to see that behavior show up in more than once, not just in this 4-week period or just in this 4-week period, but in more than one. In fact, we start with 3. I want to see it show up in at least 3, so that's half the time. All right, and then what happens is I can see that behavior showing up frequently or frequently enough that I consider it, but I don't know how that behavior is behaving. I don't know how that trade is working out in the other buckets, because what I'm seeing is, show me all the good stuff that repeats. All right, so if that behavior showed up in, say, these 2 weeks, these 2 buckets as a good trade to be taking, it may that exact trade may be occurring in these other buckets, and it may not be doing as well, right? Or okay, so you're either going to have there's really sort of 3 cases. It continues to show up, in which case it shows up as a trade that you want to take in all these other buckets. It's not showing up at all. In other words, that behavior is just not happening in these other time periods. All right, or it is showing up, but it's not doing as well. So what we have to do is we take this, these candidate behaviors, which are represented by these codes, and then we run that same simulation using that code across all 6 months, and that gives us an idea of, okay, well, I may have done really well in a couple of these buckets, but when you look at it in all 6, it doesn't do so well. And if that's the case, it gets dropped out. All right, so we go through this process of finding the behaviors that do well, that show up more than with some level of frequency, and that when you run it for the entire time period, shows that it's still a trade worth taking. All right, so and we do that by looking at trade quality and frequency. All right, and then what'll happen sometimes is that just kind of the way the buckets fall, you end up missing things because of I want to see a trade X number of times, and it can, you can have a good trade end up getting missed because of the way the way these lines fall in time. And so we actually changed this to be, instead of 6 4-week buckets, 8 3-week buckets, and then 12 2-week buckets, and look at it like that, so that we slice it a bunch of different ways, making sure I find all of the ones that are showing some level of repeatability with some level of quality, and then we put all those together and run a simulation, and that gives us this output, which is a risk factor and system quality. So the system quality is directly related to this. Whoops. I thought I was in the other program. It's directly related to this trade quality. All right. So the higher quality trades you find, the higher quality overall system you end up with. All right. The risk factor is a function of how often am I taking a max loss. All right. So this is really it's a way to understand how aggressive that set of codes is. It's also helpful to when you're trying to build a system that understands that there are humans involved here, and when they're taking max losses in a day and have to stop trading, that's very demoralizing. And so I use that in two ways. One is to understand, what's the relative risk of this set of codes versus another, as well as trying to keep that number low enough that you can deal with that demoralization factor if you're taking losses. And so I see that personally in like the results for the past 3 weeks here, where I'm trading a lot of markets here, but I'm not losing money. I'm not getting killed. All right, and that's a direct result of the way that I use this risk factor to understand how much risk I'm taking in the market. All right, but with that in mind, let's go back now to this sheet here, which shows these different behaviors that we're looking for. These are behaviors related to how the market turns, and this is how it pulls back. This is how it breaks out, and then this is specific behaviors at low volume nodes. So price action that we see at low volume nodes and the order flow associated with it. And so the question becomes, well, can you do the same thing, but specifically aimed at this area of the market when you're outside the value area and there isn't a low volume node in sight? All right, so can the machine look at that and find something to do that is profitable? All right, and so to do that, I looked at this behavior, the price action and order flow in these kinds of areas, and then I trained the machine on it. I said, okay, here's all the bars where you're outside the value area but not near a low volume node. Okay, show me what you find. All right, and so I went pretty granular. All right, so that's what this is down here now. This is for cases where I'm outside the value area but not near a low volume node, and show me six different price actions, both above and below. So I'm assuming that the market behaves differently when you're above the value area versus when you're below it. I think we all kind of know that, right? The market falls in a different way than it climbs. And then also for each sort of behavior you see, do you succeed? This is a breakout long. Does it actually successfully break out, or does it fail? All right, and so you end up with a lot of behaviors here to look at. All right, so I did that for oil. All right, and then I ran, I trained them, I built the model, I trained it, and then I ran the simulation and I did the analysis. And previously we were looking at 0209. So we're currently, this is what I'm currently trading with, a risk factor of 11.86 with these behaviors, these codes. And the system quality is a profit number of 822 on overall system quality of 4.15. This is 4.15 is pretty good. All right. Risk factor of 11.86. So that means 12% of the time I'm going to take a max loss. All right. 822 that's the actual number in ticks that the simulation shows that you make across 118 days. So it's a simulated number, but in oil that's times 10, so that's $8,200 across 118 days. That's the potential that the system says exists. And again, it's very useful, very helpful to remember. We're not backfitting a set of rules to the data. We've trained a machine on data, and then we used it to predict on data that the machine's never seen. Okay, and so this is what we've been using. All right, and what we see is that there are these periods of drought. And one supposition was, or hypothesis was, that oil in particular is a market that will break and run and spend a lot of time outside the value area. And is that a reason that we're seeing that? And so I applied the machine learning system to the areas that we just described, outside the value area, but not near a low volume node, with a great deal of granularity. And then I ran that simulation and I analyzed it. And what I found was that I can achieve a higher profit number on an equally high system quality, 4.23 instead of, 4.15 or something, with actually even a smaller amount of risk, so a lower risk factor. And so I wasn't able to dig in and see specifically, okay, is this because, or rather, does that eliminate the drought issue, and are things more linear in terms of their output? I don't know that. But just the fact that I see a fairly substantial increase in profit potential on higher system quality at lower risk by itself is enough for me to go, okay, I want to use this. I want to do this. All right. So I will be burning that in live next week in oil, while I do the analysis. I go through the process of building the models and training them and running the simulations and doing the analysis on the other markets to see if it also applies there as well. I suspect it does in at least the euro and gold, which do have a similar behavior. They break out and run like that. The yen, I'm not so sure about, and the Nasdaq's too crazy to make a prediction. Okay, so that's where I stand here. So a couple things then will be happening next week. This is mostly for members now. The overnight session for 6E is going to move to live. It's been in sim this week, so it'll move to live. And then oil is going to be running live with this new outside the value area set of behaviors, and I'll burn that in next week. And assuming there's no issues, I'll release it the following. Same thing with the London overnight. Assuming there's no issues live, I'll release it the following week. In the meantime, I'm going to be working on getting the outside the volume area. I'm sorry, outside the value area for the other markets as well. Okay, that's it. So in summary here, just kind of treading water here the last few weeks. And this is the number we're interested in. We're looking at 181. And we'll see if it's my. I don't think I had to do what I did in terms of looking at the outside the value area, just based upon what we see in simulation, what we see over the last 2.5 months here. But part of what we're doing is continually refining the system, and when you see it's very human to see a move, and I want to capture that move. And so when I look at like what happened to me in gold here, okay, I saw that, I got that. I chose to manage the trade in a way that kept me out of it. That's painful, but life. Oil, the same thing here, and I have it right here. I just my stop's a little too tight for this particular point here, and so this is just life as a trader. It happens, and you just got to deal with it. What we're looking for is enough shots at moves like this that when this happens, it's not the end of the world. Whereas, so in other words, if we can get more shots at these nice moves, then you have more opportunities to not get whacked like this. This is basically standard price variation here, right at the edge. And the market's testing. And there was some extra tests here. It's pretty interesting when you look at it, because you set that level right there. It's right at the value area edge. You tested it there, and then there you tried to get there again, and then there you tried to get there again. And that's when I shorted. All right, and then you tried one more time, and then it's just enough to take me out, and I missed a nice move. Okay, so that is it for the week, and then we'll see what next week brings. No trading on Monday. Monday's a holiday. The markets are open. I think they close early, so typically I just stay away from them. The room will not be open on Monday, so I'll see you all on Tuesday. Take care.